Prakash Diwan is joining us on Closing Bell today. Prakash, good to have you on as always. Any thoughts on Mantrapuram? I mean, obviously, there's absolutely no scope for any confusion around these matters in the market. It's quite evident in the way the stock's reacting. But how do you rank and rate the business otherwise? What would your advice be to anybody who perhaps holds the stock now?
Good afternoon, Survi. So, the timing couldn't have been more unfortunate. And why I say so is, the competitive landscape has changed so dramatically and unfavorably for most of these old NBFCs. Because the way the banks, particularly some of them are so laser focused onto, gold loans as a portfolio to grow. And case in point is CSP and, some of the other regional banks out there in the south. And not just the south, they're the ones that are also kind of, going northwards of the southern peninsula. I've also started seeing so much of this. In fact, you'll be surprised at the way SBI gold loans have grown in the last 2 years. So I think very clearly these companies had to walk the tightrope. These matters never help. But from a fundamental perspective, there's always stress. The cost of funds going up, the spreads coming, getting into some sort of pressure. And the propensity to be able to manage gold inventories in an environment where gold tends to get, it makes you feel very lax about gold prices always going up. That's something which can really be very high risk. So I think it's difficult times for somebody who's already invested. If you're still above water, you would probably pair your exposure, but don't look at fresh exposure for sure at this point.
Okay, don't look at fresh exposure. That's the call coming from Prakash. Prakash, I wanted to ask you about Sapphire. Any view on the stock? I think a couple of brokerages had initiated coverage with a positive view. And as we know, Sapphire trades at a bit of a discount in comparison to Devyani. Your view on that?
Yeah, I mean, these are businesses which are still not matured. I mean, stocks, scripts which have not yet matured on the market. So what happens is that you tend to kind of go down to the underlying business and start figuring out in terms of, whether there's anything which is veritably changing for the stocks to start reflecting. But I haven't seen anything which kind of tells you that this is superior to the other. I mean, if you look at what Jubilant Foods is still doing and marching ahead with, or for that matter, even Westlife, I think they're way ahead. The only advantage, Nigel, I should point out, is that
Okay, all right. I think Prakash is having some audio issues out there, so we'll get back to Prakash in just a bit. But a quick check on the markets. Well, a couple of stocks are making a good comeback, namely Adani Enterprises as well as Adani Ports. Both of them from the day's low. They've recovered. They're cutting their losses. And Tata Consumer as well has moved up a little bit. But the big stock today was Tata Steel. In a run-up to its numbers, well, the stock rallied yesterday. It was up 2.5%. They report actually a good set of numbers in the fourth quarter with a beat across parameters. I had a conversation with Tata Steel's MD and CEO, Mr. Narendran. He spoke to us on the coking coal cost as well as he clarified on their interest on NMDC Steel. Let's hear him out.
So I'm not remembering the exact numbers of coal consumption cost, but this quarter will be about $10 higher than last quarter, consumption-wise. So the procurement may be about $25 to $30 lower in this quarter, but we will get the benefit of that only in the next quarter. Quarter on quarter, we expect prices this quarter to be about 1,200 rupees higher than last quarter. Okay, so that's our assessment. As far as India is concerned, spot EBITDAs just now are, I would say, slightly lower than what we've announced for a simple reason. This quarter, we've had a lot of shutdowns. We will have a lot of shutdowns. April, June is when we take a lot of our shutdowns. So if you look at it from a cost point of view, the cost per ton tends to go up because you have lower volumes. The fixed cost gets apportioned over lower volumes. No, we haven't. For NMDC, we haven't. Neelachal was different because we've always said that we were interested in long product asset. And Neelachal was a long product asset. It had 2,500 acres of land next to our existing site. It had 150 million tons of iron ore. So we didn't value it as a 1 million ton steel plant. We valued it for its entirety.
Okay, that's Tata Steel for you right now. Prakash, any thoughts on the stock from here? Okay, I don't think Prakash can hear us. We'll try and fix that line and come back. Let's take a break and come back with Prakash. He should be ready with us. The market, by the way, is down 60 points, so it's maybe seen a little bit of recovery, but it's in that very tight range, down 80, 90, and then some recovery, and then back down again. We'll take a break, the first on the show. Prakash with us, and we'll also have Jitendra Goyal of credits to it.
Well, don't let the softish nature of the mid-cap index fool you. There is a massive, mega PSU rally underway. A lot of it doesn't seem to sort of, conform to any immediate sense or logic. But look at the moves. EIL, Engineers India, is up 17%. The volumes are pretty huge on a lot of these stocks. RVNL, absolutely gravity-defying moves. They continue 10% up. BHEL, you can argue that, yes, there's been a lot of fundamental news flow. You heard the company on the channel yesterday, and they're sounding extremely optimistic. And there's NLC, erstwhile Navali Lignite Corporation, IRFC, Shipping Corporation of India, NHPC, SJVN. It's cutting across lines. Anything that has a Government of India tag is simply shooting through the roof this afternoon. Prakash, I just want to run this past you. What do you make of this trend? I mean, I don't know if this is just some funny trading going on. Yes, we all know about the railway opportunity. There's no denying that. But the manner in which these stocks have started moving, RVNL, IRFC, does it at all make you uncomfortable? What do you make of the moves?
No, good afternoon, Sabi. Not at all. I think, the government is the biggest, it's got the biggest checkbook in town today. And what's happening is this government has very clearly set itself to achieving a lot of targets before 2024 for obvious reasons. And there's no delay or lag in terms of, starting to spend on those projects that they've announced. I mean, usually you see that the first half is tepid. April, May, nobody talks about new spending. But here, it just seems seamless. March is gone, April has started. But the projects keep on getting announced. I mean, the number of trains that they're talking about, the number of, new capacities that they're talking about on the defense side. I think everywhere there is a very clear momentum that the government is pushed for, and that's likely to pump prime, in terms of, capex going percolating to the private sector as well. So I think it's a very calibrated move, if you ask me. And most of these players which sit on huge capabilities and not just capacities like BHEL, RVNL, RailTel, they will definitely start getting re-rated. So, and what happened to the Gujarat government owned PSUs just about a week back? We were talking about, this whole policy announcement and clarity in terms of how to share the wealth with minority shareholders as well as the government itself. I think it's going to become the norm. So most PSUs will be able to reward shareholders much more amply and clearly, and that's probably likely to happen sooner than later, Subi. So that's very clearly a reset that's underway.
I don't know how many of you all remember, but RVNL's issue price was 19 rupees when it listed in April or May of 2019, so just about 4 years back. And since then, look at the kind of return that we've got in RVNL. And yesterday, of course, it's got that Maharatna, Navratna status as well from the Government of India.